All right, let's begin the show then by connecting with Nandita Sinha. She's the CEO at Myntra to talk about the end of reason sale, their beauty foray, and how they're leveraging technology and chat GPT as well as a selling point. Nandita, good to have you on board to begin with. It's pretty exciting with this sale, 6,000 international domestic D2C brands. It's the 18th edition of the end of reason sale. Just take us through what exactly we can expect.
So thank you so much for having me here today. I think all of us are very excited for the 18th edition of Myntra EORS. This is a summer edition. And I think this year, the teams have really worked hard over the last few months to be able to present a carnival, an event, which is pivoted really on three directions. The first is how are we creating differentiated selection, unique selection, bringing brands and selection together for different cohorts of customers. We have a brand new offering in the form of Forward, which is the Gen Z destination for fashion, largest Gen Z fashion destination with almost 65,000 styles, 500 plus brands, which is part of this EORS 18 edition for the first time. So that's very, very exciting. Along with that, I think the second pivot has been on the new categories and the new need states that we are able to present to our customers. So if you look at footwear, for example, this is going to be a very, very important edition for footwear, where we will grow sports footwear by almost 30%. And it is on the back of differentiated selection that is being brought for the customers in the form of international selection, whether it is the Nike global marketplace or it is new launches in the form of Converse or even celeb collaborations with Myntra EORS specials with Puma and Anushka. So I think that's the second pivot. We've been continuously making inroads in beauty. This has been one of our fastest growing category this year. We are growing ahead of the market, growing ahead of the platform. And this will be one of the biggest editions of EORS for beauty. I think what is also important is the inroads that we are making in our tier 2 cities. There will be 15 million plus new visitors from tier 2 who will come into the EORS ecosystem and the Myntra ecosystem. And EORS is a great opportunity for them to be able to actually experience fashion for the first time through EORS.
Now, I also know that you all are looking to really expand your beauty portfolio a lot more. But I ask why? Because at a time like this, there's so much competition in the space. Reliance has made a big entry. The likes of Nykaa, even Zara, etc., have really crowded the space a lot. Also, there is an overall slowdown in the sector. So why beauty?
I think for us, actually, what we have realized is that there are two things which are really standing out for us as we are building in this category. Like I said, we are growing 3x of that of market today. So while growth is slowing down for us, actually, we are seeing this really accelerate and largely on the back of three things. One is we have the top, the top 50 million customers in the country today buy fashion and lifestyle from Myntra. And we are just expanding their basket with the beauty, with beauty as a category. And we are seeing great resonance in this. Our Myntra insiders, which are now 8.5 million this year, are actually some of our biggest customer cohorts for beauty, because this is where we see a lot of the where customers are actually coming and buying beauty on Myntra. So they're actually exploring Myntra for a different use case. So I think our very, very strong customer loyalty that we have built over the last few years is what is helping us in growing. I think second is the pivot that we've taken around technology. If you look at what we have been able to build for the beauty category, we are uniquely differentiated on the tech tools that we provide for discovery and personalization for customers.
So, Nandita, if we were to break it down, how much does fashion contribute to your overall revenue pie? How much does beauty contribute? And how do you see each of these verticals faring?
Fashion is a large overall market, and therefore it continues to be one of our big categories. Beauty is growing faster because we are a smaller category on the platform, and fashion also continues to see very good growth for us, largely in pockets which are differentiated. I think, like I spoke about, footwear is a category which is seeing a lot of growth. Ethnic fashion for us actually has been a great story, also on the back of a proposition called Runway Icons, where we actually brought together the the differentiated premium ethnic fashion brands of the country. And this has helped actually the category grow. Kids as a category is growing for us. So I think we are growing. I think these are the pockets which we are really, really doubling down on. Forward, which is our Gen Z fashion platform, has been growing month on month. So I think fashion continues to grow, and beauty is now an added basket builder, or is added to the repertoire of the fashion customer at Myntra.
So what is the contribution then, Nandita, from the large metro and tier 1 cities, and how much is the contribution from the non-metro, and how are you looking to really penetrate and grow further into some of the smaller towns?
Sure. I think as we speak today, I think metro cities continue to be upwards of 50% of the revenue. But I think the growth rates of new customer addition that we are seeing in non-metros is far, is actually superseding the metro growth. Today, we are actually, our new customer addition overall in Myntra has been upwards of 30%. A large part of it is actually coming from non-metros. And over the next few years, we will see these non-metro customers also expand their fashion wallet online and on Myntra. And this is where you will actually see growth for metro and non-metro kind of, business from metro and non-metro matching each other in terms of size also. Today, metro is contributing more than 50%. But I think as new customer acquisitions keeps on happening in the tier 2 cities, we will see these numbers change in the next 2 to 3 years.
Now, you guys have also announced the appointment of Shah Rukh Khan as the brand ambassador for this event of yours. How are you looking at, the kind of brand value that Shah Rukh Khan is going to bring? And what's the strategy really in terms of ad spends using a lot of celebrities as well as influencers? Because that has always been Myntra's game plan.
So I think, there are two parts to this, I would say. I think one is Myntra's ability to really innovate in the social and the social commerce space also. So if you look at social commerce, we have 15 million users every month who visit us on social commerce properties that we've created on Myntra. So whether it is Myntra Studio, Myntra Live, and a new innovation that we did a few months back, which was on Myntra Minis, which is a short form format for content. So we continue to innovate over there. We continue to build our our relationship and our capabilities with the influencers off platform also. And therefore we have Myntra Live, which is hosted both on and off platform with almost, we have 8,000 plus live sessions which are going to happen, and 20 plus celeb-led lives also. So we are leveraging both influencers as well as celeb for this. And I think finally, talking about Shah Rukh Khan's, his face and lending that to the EORS campaign, what we realized is that as we want to expand into new categories, into new customer segments across metro, non-metro, millennial, Gen Z, etc. Shah Rukh Khan's name was one name which actually cut through all of the customer types, and everybody, he has a fashion sense of his own, he has a sense of style of his own, and he's beloved by every customer in this country. And therefore we thought that, the fact that Myntra and EORS is meant for fashion for everyone across age groups, across city types, was something that was best elaborated by Shah Rukh Khan. And we've seen great response to his being a part of this campaign and him being a face of this campaign. And we are hoping to democratize fashion. Our ambition is to democratize fashion and lifestyle through technology. And he really lends that face to this mission.
Right. And what's the strategy as well when it comes to your online versus offline, because you guys are looking to deploy ChatGPT. It's a powered feature for the shopping app. How's that going to work?
I think, one of our big differentiators has been our ability to democratize fashion through technology. And also, like I said, discovery of fashion and personalization of fashion, or actually discovering personal choices, is still an unsolved problem in e-commerce. And that we have been able to, the gap we have been able to bridge through technology. I think last year we had two very, very big innovations. One was in the form of social commerce, which was Myntra Live, Myntra Studio, and Myntra and how we built it with almost having, like I said, since it's in inception, 8,000 plus live sessions. So this was a big move for us to really bring the social media world and the influencer world with commerce together and create that seamless trend spotting to shopping journey. I think we also introduced something like M Express, which was about speed. How do we get speed? How do we actually help customers quickly spot and shop and get them delivered to their end? Personalization on size fit was a big innovation for us, which we continue to build. I think this year is all about how do we help customers go from having only one having actually helped them build the entire repertoire and their entire outfit. So my stylist is something which is about an AI powered tool where we are able to create an outfit out of a product that a customer has bought or browsed or even as part of their wardrobe. My Fashion GPT at scale, I think we are the global first leader to actually create something like this, where search becomes conversational. It's actually a very consultative way of selling and buying. And it's not only the traditional search browsing journeys that customers today have. And we do see that this is going to be very big in the future.
Finally, Nandita, what's the outlook when it comes to your revenue run rate? What is the average cost of acquisition per customer and how you're looking to grow?
I think, if I could give you a sense of how growth has been panning out for us, metros continue to, be the growth driver for us with the high share. And that shows the kind of differentiation we have with the metro customers. Also, our acquisition has been, we are building a pipeline for the next set of growth drivers through our new customer acquisition. So we are growing at 30% on the new customer acquisition side. So I think this is a sense of where growth is coming. I spoke about new categories like beauty, footwear also growing, as well as core categories of ethnic fashion, Gen Z fashion growing for us. So I think we have, as we are looking at how we are creating differentiation, categories where we are differentiated, customer segments where we are differentiated are actually growing much faster for us. And we continue to acquire customers, and therefore that is going to help us in our journey as we go forward.
Well, let's get a move on then. And valuation markdowns, well, that continues to plague a lot of startups, including a number of unicorns, where you have had domestic VC as well as private equity firms that had been attracting multi-million-dollar investments over the past few years. But the funding slowdown, the global bear markets as well, is leading to a lot of valuation cuts. My colleague Sharad joins in with a synopsis of the companies that have recently seen valuation markdowns. Sharad.
Well, yes, in focus will be the startups and the unicorns where the valuation markdowns are happening. And overall, if we see recently, the focus would be in Byju's, where this suffered a second markdown coming in, and this is coming from BlackRock by almost 62% from the peak valuations of $22 billion. Even Meesho recently saw a valuation markdown from Fidelity Investment, and bigger unicorns in the month of May also announced valuation markdowns, especially for Swiggy, 2 valuation markdowns coming from Baron Capital and 2 coming from Invesco as well. Other big names are also there in the list, which includes Spine Labs and PharmEasy. But the question remains is why the valuation markdowns are happening. And firstly, the important thing is excess liquidity was there. And because of that, there were very lofty, sky-high valuations. But do remember, rising interest rate and inflation also impacted investments very significantly. And also the companies across the globe, they have started to save off the cash burn, and they have also resorted to cash flows, and the main mantra being path to profitability, especially for the incoming IPOs. Also do remember that the funding had dried up, and at a multi-quarter low is the overall funding happening in the startup system. And roughly one could say $2.8 billion was actually injected in the March quarter of 2023.
When it comes to real estate, it clearly seems like the buzzword is tech solutions and advisory services. One such company, PropertyPistol, a real estate brokerage and advisory company, has recently concluded a fundraise of 45 crores from investors, the likes of ICICI Bank as well as Baring Private Equity Partners. Let's connect with Ashish Agarwal, who is the founder and CEO at PropertyPistol, to talk a little bit more about the company's plans. And, I was recently talking to some of the other companies that operate in the exact same space. I want to just start off by understanding, how is it that you're really going to stand out in this pretty crowded market?
Hi, thanks a lot. I think the space is huge. The requirement of a property buyer spans across multiple stages before a buyer closes the transaction. And whatever players you see today are serving some or the other part of the entire transaction. So we are a full stack real estate services company, and our basic idea is to start right from search and take it up to the final closure and the transaction of the property. So the way, that's one difference between us and other players in the industry. Second difference between PropertyPistol and other players is we are the approach, the way we are targeting this entire problem of giving buyer a great experience in transacting and buying a property. So the approach is very different. And I think that's the difference. We are coming ground up by aggregating all the developers on our platform and aggregating all the brokers on our platform, so that buyer at our platform gets to see the entire market inventory at a real time updated and get to have a great experience of buying a property. So, the demand is huge in terms of the requirement and the opportunity, because if you go and buy a car today, which is worth 10 lakh rupees, or you go and buy a jewelry from a branded showroom, which is even, let's say, worth maybe 10,000, 15,000 or a lakh of rupees, the type of experience a buyer gets in concluding that transaction, versus compare that if a buyer go out and buy a crore or more worth of a property and the type of experience that buyer gets. So definitely there is a lot to be done in this space, and buyers need better service, particularly when the transaction size is that big and we are talking about one of the basic need of a human being.
Okay, now let's talk about the fundraise that you've recently concluded. Who are some of the investors on board, and what will the funds be utilized towards?
So we have got marquee names like ICICI Bank and Barings Private Equity Fund, which is a parent company of a US-based fund. The parent company of Barings Private Equity is a US-based fund. These are the investors who have got on board. And as I said, the basic idea for us is to aggregate the entire market inventory, which is controlled by two stakeholders. One is the primary inventory, which is controlled by the developers. And second is the resale and rental market inventory, which is also called secondary, which is almost equally big as that of primary on a country level. So we tend to, we want to aggregate all the developers and all the agents on our platform. So this fundraise is basically to aggregate the agents on our platform, and developers we have already aggregated on last 10 years of our operation. We are already top selling partners for all the top 20 developers in the country. And, developer wise, we are pretty home in terms of aggregation bit. Now, the task for us as a next step in our growth and in our vision is to aggregate the agents, the unorganized real estate brokers in the country. And this fundraise is primarily to, take a major step in that direction.
Okay, so are you currently profitable?
So last 10 years, we have bootstrapped. We started from a single person, me, and we have grown to 1,300 plus employees, bootstrapped, profitable, and cash flow positive. And that's what, attracted, marquee investors, like I said earlier. So we have been profitable and cash flow positive throughout our journey.
So what is the profit, that you clocked in for the year gone by?
So year gone by, our EBITDA is close to 10+%. So last year, March, we were around 750 employees. This year, March, we were almost 1,300 employees. So we have funded our internal growth with our internal accruals, and even with that, we have managed a EBITDA of 10+%.
Okay. What is the transaction value that you've clocked in so far in India as well as at the Gulf Cooperation Council?
So in overall at a company level, last year we have transacted close to 5,500 crores worth of properties. And out of that, almost 600 crore worth of properties we have transacted in GCC countries in Dubai, Abu Dhabi, and Doha. So we have three places. We have teams and offices. So around 600 crores worth of properties we have transacted there in GCC.
So In terms of the number of projects that you've worked on, if you could just walk us through how many those have been, the sales of how many homes that you've managed so far.
So last year we have closed 6,000 plus apartments sales and spread across 300 plus projects.
What's the eventual game plan? What's the goal? Where do you see the company headed in the long haul?
In the long haul, we intend to aggregate the entire market supply on our platform. We intend to aggregate all the developers and brokers on our platform, and we want each and every single buyer of real estate to come on PropertyPistol to start their search and to satisfactorily close their transactions. So that's the agenda and the game plan of the company. And we are moving strongly towards that vision and goal. So it will be a brick and a click model where the online searches will start, and eventually our experience centers on the ground, a buyer will get a great experience of buying a property through PropertyPistol at the best possible price with great global quality of service.
All right, thanks so much for taking time out and joining us on Startup Central.
Thank you. Thank you very much.
Let's move on then and hear it out from Rahul Bhasin, Managing Partner and Founder at Baring Equity Partners, who talks about the outlook on ESG and how it's going to benefit companies.
I think that education process is the most necessary thing, and I think that dissemination of that information is also very critical. I am a firm believer that people will do the right and sensible thing with an interest of self-preservation, if nothing else. And we don't need to put these rules and regulations about it. I think there is a gross need for education.
Thank you. And what are the sustainable investments you have made so far? What is your strategy and philosophy of your firm?
Look, we've ended up investing in a lot of companies, but I invest in companies to generate a high return for my shareholders. It's not because I'm trying to be good or I'm holy in any way. And I think that the thing that I find most wrong with ESG is this entire attitude of trying to ascribe higher morality to ESG. I think it's just necessary. It's the way people should behave.
All right, on that note, then, we're timed out on this edition of Startup Central. Thank you so much for watching.